Buying a stock can sometimes be difficult because there's so many different valuation metrics out there. So what I want to do in this video is make your life a bit simpler, and I want to show you a quick and easy method to find out if a dividend stock is trading at a potential attractive value. And what I'm going to do is show you the method, and then I'm actually going to go through some real world examples and stocks that are doing this right now, here today. So make sure you stick around for this whole video. Now guys, if you are new here, consider subscribing and hit that like button down below as well. Let's try to get 200 likes on this video. I'm sure we have at least 200 dividend investors on this channel, so that should be a pretty easy like challenge to beat. Alright, so now let's jump into it. And like I said, just keep in mind there are going to be many different ways to really value a stock and figure out if it's trading at a fair or attractive valuation. This is just one of my favorite ways to do it for dividend stocks specifically. Other methods that people use that I'm sure you've heard of are things like comparing the PE to the forward PE, or maybe comparing the PE or forward PE to the market average PE. Then there's other metrics like price to sales ratios, price to book ratios, earnings or revenue growth. These are just a few other metrics, so keep in mind this isn't like you only pick one and just go with it. What I'm going to do today is show you a method to really help you zone in, and then you can do these other analysis once you found a stock that could potentially be a good value. And while I look at all these valuation metrics here, before I go into my broker and hit that buy button, I do need a quick way to look at a stock, look at a company, and figure out literally in a few seconds if it's worth looking into further. And that's exactly the method that you're about to see. So here's what I do. Hop onto Seeking Alpha and search for a stock you're thinking of. Once you type that in, go ahead and click on the Dividends tab, and then finally click on the Dividend Yield subsection in here. Now you'll see a chart by default, which is on a 5-year view. And you can go ahead and click on the All button, and this will expand it out to the long-term horizon, usually around 10 years or so if the company's been paying a dividend for that long. In this example, we're looking at Altria, ticker symbol MO, which, if you remember, back in 2019 offered close to 8% dividend yield. Now, when we look at the historical average here for the dividend yield for Altria, probably close to 5% or so is the average yield for this stock. So when it was trading and yielding us an 8% dividend yield, it was 60% higher than its norm. And this was due to a combination of a few factors like the Juul fears, vaping fears, that industry becoming heavily regulated, maybe going irrelevant. All these other factors really threw a lot of fear into the market. And the bottom line here is what you saw, which was a high dividend yield on a solid company. Regardless, the method really is what you want to see in this chart is that the current dividend yield as it stands today is higher than the average dividend yield. Ideally, you want the difference to be as high as possible, and definitely above the average yield for sure, because this is where you could figure out if there's value or not. Remember, the higher the dividend yield is, the lower the stock price is. And what do we want to do as investors? We want to buy low, sell high. So what we can do is actually use this quick method to figure out if a stock is actually trading at an attractive value right now, because if you just look at the charts, it doesn't necessarily tell you the whole story. When you look at its dividend yield history compared to what it is right now, it gives you a good idea if you're getting value in the stock right now or not. Let's pick another popular dividend stock here, AT&T. This is a popular stock because their starting yield is usually near 5%, so many investors think it's great value. But when looking at it historically, what we see is the average dividend yield for AT&T over the last 10 years is in that 5 to 5.5% range. Currently, the stock is trading at around a 5.47% yield, which means based on this metric, it's trading at a fair value. So for me, AT&T at these current prices today is not a buy because it's not really providing me enough value to go in and put my money into when there's other stocks out there that are providing much better value. This doesn't mean that AT&T stock can't go higher. It just means, at least to me, that this company is probably around fair value right now. Now what I want to do is actually show you something interesting, which is a very popular dividend stock. In fact, it's a dividend growth stock. And what you'll see is that this stock is clearly not at a great value today. Procter & Gamble is a company that almost every dividend investor wants to own, but there are times when it makes sense to buy and times when it doesn't. Right now, based on this metric, Procter & Gamble is trading at its most expensive levels in the last 10 years. Back in late 2015 and mid-2018, when it hit near a 4% dividend yield, that was when you wanted to really pick up some shares in this company because it was trading at a deep discount. But right now, it's trading at around a 2.4% yield, while the average is closer to around 3%. So this would really be a stock that is not providing us great value. It may actually be overvalued at current prices. And although it may be an excellent company and a great dividend stock for the long term, our money is probably better spent elsewhere as it stands today. So like I said, this is just one more metric to look at, but this is a quick metric to figure out if a dividend stock is actually providing us value today. But one thing to note is that sometimes you're going to hear this term when it comes to dividend stocks especially, of value traps. This means that the company is providing a very high dividend yield which attracts investors, but the actual fundamentals of the company are not that strong, and the company may not last or continue paying that dividend for the long term. As a result, it's a trap for investors because it attracts them initially, and then later the dividend may be cut and they fell for that trap. So don't fall for that value trap. Make sure that you do further research to find out if that dividend the company is paying is sustainable. So I believe Ford is actually one of these value trap stocks possibly right now. The current yield is around 6.5%, whereas the average appears to be around 3.5%. So based on my metric here today, this alone will show us that it appears to provide some deep value. And if you think about it, it makes sense because there's a lot of fear around Ford that it may not be around for the long term if companies like Tesla continue dominating the EV market, as EV is expected to be the future most likely. Now, arguments can be made in either camp saying that, Ford is a value stock, some may say Ford is a value trap, but either could be right in the long term. And for me personally, if I have to question if a company is going to be around or relevant in the next 10 years, it is not an investment that I want to put a single penny into. So I hope this helped, and I hope this will actually save you a lot of time when analyzing dividend stocks. But for those of you that have stuck around up until this point, I actually want to show you a few companies that I think are actually a pretty good value as it stands today using this metric. Here we have AbbVie, ticker symbol ABBV. And while the stock was really a good opportunity to load up in mid-2019, it's still trading at an attractive yield around 5% versus its average 3.5%. Next, we have IBM, ticker symbol IBM. And while some may not be a fan of this company, it is providing some excellent value here in my opinion, near a 5% yield versus an average 3% yield. Here we have 3M, ticker symbol MMM, with a current yield around 3% and an average around 2.5%. And finally, here's a fun one, the Cheesecake Factory, ticker symbol CAKE, with a current yield of 3.5%, while its average is around 2% or so. This is another company providing potentially excellent value at levels we haven't seen ever before in this stock. Now, I really do hope that this video helps you save a lot of time when analyzing dividend stocks. But if you are curious as to what other things you should look for when it comes to dividend stocks, check out this video that I created. I'll leave a card up here, and I'll leave a link in the description down below. And that video is going to go over 5 different things that you should look for before you invest in any dividend stock. Just because a company pays a dividend today does not mean it's going to continue paying a dividend tomorrow. So you want to make sure that when you make that investment, it's going to be a solid company that will continue growing, paying that dividend for many, many years to come. Guys, hope you enjoyed this video. If you did, make sure to drop that like down below and help us get 200 likes on this video. Thank you so much for watching, guys. I truly appreciate the support. But either way, don't forget to invest positively, and I'll see you in the next one. Peace.